things that genuinely matter to you.
Okay, let's start with the macro picture then, the economic outlook. Well, according to the latest Wall Street Journal quarterly survey of professional forecasters, it's looking notably more optimistic than just 3 months back.
Yeah, what's really striking is that rebound in sentiment.
Yeah.
Economists, they're now expecting stronger growth, more job creation, a lower risk of recession, definitely, and inflation continuing to cool.
So that recession probability number.
Right, it's fallen pretty significantly from 45% back in April down to just 33% now.
Wow.
And this resilience, it's noteworthy, especially when you hear consumer sentiment has shifted from bold to careful. But the underlying indicators seem to be holding firm.
Okay, but that improved mood, it seems to come with a big caveat, doesn't it? This persistent turmoil around tariffs. President Trump announced a 30% tariff on goods from the EU and Mexico, kicking in August 1st.
Yeah, and this move, you have to see it as a key piece of this much larger, ongoing focus on U.S. trade deficits. The threats are clearly escalating.
Right.
Mexico, they responded quickly, boosting border security, curbing their own retaliatory tariffs, for now at least.
But the EU.
Well, the EU is in let's say, a tougher spot.
Yeah.
They're actively weighing countermeasures, thinking about using their anti-coercion instrument.
That legal tool they have.
Exactly, to fight back against economic pressure. But the real takeaway here, for everyone listening, is the uncertainty it creates. It makes long-term strategy incredibly difficult for any global trading partner.
Okay, shifting gears a bit, let's look at domestic policy. There's this new tax law signed on July 4th, apparently providing some, well, interesting new ways to reduce capital gains taxes without actually cutting the headline rate. That 23.8% stays.
That's right. The ingenuity, if you like, is in shrinking the tax base, not adjusting the rate itself.
How does that work?
Well, Congress did it by making the Opportunity Zone tax break permanent. And they significantly expanded the break for qualified small business stock, that's Section 1202, designed to boost investment in certain private companies. They raised its cap to $15 million.
Oh, okay.
And maybe even more broadly impactful, the estate tax exemption. It's been massively expanded to $15 million per person, and crucially, with no expiration date.
15 million.
Yeah. It means over 99.8% of estates will avoid the tax annually. And importantly, it allows for tax-free treatment of appreciated assets at death if they're still held. It's a quiet but pretty significant shift for wealth management.
All right, now here's where things get, I think, really interesting. Let's talk about Elon Musk and just how interconnected his business empire is becoming. SpaceX has just agreed to invest, what, $2 billion in his AI company, xAI? That's nearly half of xAI's latest fundraising round.
It's more than just cross-investment, isn't it? It's really a masterclass in using an existing ecosystem to scale up new ventures incredibly fast.
Right, competing directly with the big AI players.
Exactly, and we're already seeing it in action.
Yeah.
xAI's Grok is powering customer support for Starlink. There are plans to embed it directly into Tesla's Optimus robots. So the crucial insight here isn't just the ambition, it's how this kind of concentrated internal deployment lets Musk basically dictate the pace and direction of AI integration across really diverse sectors. He can often bypass those traditional market adoption cycles.
And speaking of AI's impact, the journal highlights this fascinating dynamic. What do you actually do with the time AI saves you work? Is it the reward for being more efficient, just more work?
Precisely. You have companies like Amazon pushing employees to invent for customers more quickly, using that freed up time.
Right.
Meanwhile, nearly half of workers admit they'd rather just hide their AI time savings. It leads to this thing called productivity theater.
Productivity theater.
Yeah. Some companies, more progressive ones, are maybe reallocating this time to professional development. But if you look historically, new tech often just speeds up the pace of work. It doesn't really lighten the load.
So the implication?
Well, the real implication here is maybe a subtle shift in power. AI forces this fundamental rethink of what work even means. It blurs the lines between genuine efficiency and just increased demands, raising real concerns about burnout.
Okay, let's pivot now. Automotive sector. We hear that new electric vehicles are, well, struggling a bit to find buyers, but the market for used EVs is apparently booming.
It's a really significant market rebalancing, yes. Used EV sales actually topped 100,000 in the second quarter. That's a first.
100,000 used ones.
And prices for used EVs fell almost 32% just in 2024. That's like 10 times the price drop for used gasoline cars.
Wow, why such a big drop?
Well, a few things are driving it. High depreciation on new EVs, partly due to worries about battery life down the road. Also, the rapid obsolescence new tech comes out so fast. And then there are the expensive, specialized repairs sometimes needed. So while, yes, EVs save money on fuel and maintenance day to day, that steep depreciation is the big hidden factor. It's making new EV ownership significantly more costly overall than a lot of people initially realize.
Okay, so from cars to capital, Wall Street firms are making some strategic moves, trying to bring private investments into Americans' 401ks.
Yeah, what's really significant here is the evolution of something called continuation funds in private equity.
Continuation funds.
Basically, they allow PE firms to hold on to their best-performing companies for longer. Instead of a forced sale after a set time, they can offer investors liquidity through a sort of secondary market transaction within the fund. This strategy, it kind of grew out of necessity during the 2008-09 crisis, but now it's being used much more proactively to, quote, manufacture liquidity.
Interesting.
And at the same time, there's this strong push. Sounds like even an expected White House executive order is coming to make it easier to include things like private credit and real estate directly into 401k plans.
So opening up these asset classes.
Exactly. The underlying goal seems to be democratizing access, letting individual investors get into asset classes that were once pretty much exclusively for big institutions. It could fundamentally reshape retirement portfolios.
All right, moving into the cultural landscape. There's a striking trend reported, the rise of super fakes in the luxury handbag market. And these sound like they're way beyond the typical knockoffs you see on the street.
Oh, absolutely right. These super fakes, they can cost anywhere from $500 up to $5,000.
Well, $5,000 for a fake.
Yes. And they're distributed through sophisticated channels like encrypted messaging apps, often with real-time customer service included.
Wow.
They're apparently so convincing that even experienced sales assistants at the luxury brands themselves struggle to tell them apart. It's forcing resellers to actually invest in advanced tech like X-ray and XRF scanners just to authenticate bags.
So what's driving this?
Well, the journal suggests it's driven partly by younger shoppers who are embracing these replicas almost as a statement, a way to give big brands the middle finger, challenging the high markups and the whole idea of exclusivity.
And it's hurting the real brands.
It seems to be eroding that traditional brand value, yes, and directly impacting sales in the legitimate luxury sector.
We're also seeing a very charged public conversation bubbling up around the events of January 6th. Former defendants are apparently finding quite a receptive audience at local Republican fundraising events.
Yeah, this really highlights a growing dynamic around, well, shifting narratives, doesn't it?
How so?
These individuals are using these platforms to present, let's say, their version of what happened on January 6th, often recasting it as a largely peaceful gathering.
Which contrasts with official reports.
Exactly. It contrasts sharply with official reports detailing injuries to hundreds of law enforcement officers and, associated deaths. It just underscores how different groups are actively working to shape public perception of significant historical events, and how those perceptions can really diverge from the established facts.
And turning to the digital sphere, there's apparently a new wave of influencers, thin influencers they're called, on platforms like TikTok, selling weight loss tips and promoting extreme thinness.
That's right.
Yeah.
And while the platforms themselves are, attempting to set some limits on this kind of content, maybe directing users to eating disorder resources,
That's right, yeah.
these creators are proving quite adept at finding new hashtags, new terminology, basically ways to skirt the restrictions and keep pushing their message. Experts in eating disorders are warning that these posts promote highly unrealistic standards. They can normalize disordered eating and very restrictive behaviors, having a significant negative impact on young women's body image and mental health. It's a pretty worrying intersection of social media trends and public health concerns.
Okay, let's shift to geopolitics. President Trump has pledged to send Patriot air defense systems to Ukraine. Interestingly, with the European Union footing the bill, this comes as Russia is intensifying its drone war.
Yes, this is a critical development in the ongoing conflict. Russia is launching just record numbers of these Shahed-type drones.
They're cheap, disposable ones.
Exactly. They're cheap, disposable, often used in swarms to overwhelm defenses, and they're mixing them with decoy drones designed just to draw fire and deplete Ukraine's interceptors.
And Ukraine is struggling to keep up.
They are struggling to adapt their defenses, yes. Ukrainian experts, they specifically highlight what they call a war of resources. Their own domestic production capacity for cheaper interceptors isn't being fully utilized, they say. Meanwhile, NATO countries are lagging in their own procurement cycles for supplying more advanced systems. It really underscores the need for incredibly rapid adaptation and maybe more efficient defense industrial policy in modern warfare.
The Wall Street Journal also reports on escalating tensions in the Middle East. President Trump signaling support for potential Israeli military action if Iran continues pursuing a nuclear weapon.
Yeah, the nuanced diplomatic position here is quite fascinating. Reports say Trump favors a diplomatic settlement ultimately, but importantly, did not object to Israeli plans for preemptive strikes if needed.
And this follows earlier attacks.
Yes, this follows previous U.S. and Israeli attacks back in June that reportedly set back Iran's nuclear program by potentially up to 2 years. So the broader geopolitical calculus there is incredibly complex and high stakes. And alongside these strategic maneuvers, you have the just harrowing humanitarian situation in Gaza. Residents facing this agonizing choice, risk death trying to get aid or potentially starve.
Especially with the new aid systems.
Exactly. Particularly with these new aid distribution systems, which are backed by Israel and the U.S. and explicitly aimed at denying resources to groups like Hamas. It's just a region grappling with both these major power plays and profound human suffering simultaneously.
Okay, finally, let's zoom way in to a very specific local battle in Palmer Lake, Colorado. A small town fiercely divided over plans for a massive Buc-ee's roadside rest stop. It feels like maybe a microcosm of bigger issues.
Oh, it absolutely is. The Journal frames it as an epic battle over the soul of the American West.
Wow.
And it really reflects this broader backlash you see in places against sprawling commercial development that just consumes open land.
So what are the arguments?
Well, opponents, and they include some heavy hitters like billionaire media mogul John Malone. They cite critical concerns over things like water supply, light pollution, the impact on migrating wildlife. Proponents, on the other hand, argue for what they see as kind of inevitable growth, plus much-needed local tax revenue that would benefit the community.
And it's gotten heated.
Apparently so. The dispute has even spilled over into public accusations, private texts being made public. It really showcases the incredibly high stakes of these local land use conflicts. And these, in turn, reflect complex calculations for real estate investors and infrastructure developers who have to navigate public sentiment and environmental concerns.
So after all that, what does this really mean for you? We've covered a lot of ground today, haven't we?
Yeah.
From global tariff nuances to superfakes and luxury goods to how work itself is changing.
Yeah, if you try and connect these threads, what really emerges is this landscape of just rapid interconnected transformation.
Right.
It really underscores why critical thinking about information, why adaptability in your investments, in your career strategy, and why having a nuanced understanding of these global and local dynamics, why it's all more essential now than probably ever before.
Okay, that leads us nicely into our first deep question for you. Given the economic resilience we discussed, but also that shifting tariff landscape and the evolving tax policies for investors, what core strategies might professionals on Wall Street be reevaluating right now for the second half of 2025? And importantly, what unforeseen factors could potentially disrupt those plans?
Well, professionals are almost certainly reevaluating supply chain strategies. That tariff volatility forces it. They'll be looking harder at regional diversification, moving beyond maybe some traditional hubs.
Makes sense.
We're also likely seeing a strategic reallocation of capital, leveraging those expanded tax breaks we talked about on capital gains on estates to really optimize portfolios for clients.
And the potential disruptions.
Unforeseen disruptions. Well, further, maybe more aggressive escalations in trade disputes could be one. That could hit corporate earnings and consumer spending much harder than forecasts currently suggest. That's a key risk to watch.
Okay. Second deep question. We've talked about AI reshaping work efficiency and also how superfakes are challenging traditional luxury markets. What does this kind of dual trend, advanced tech on one hand, evolving consumer behavior on the other, suggest about the broader future of, say, brand value and maybe human capital in our increasingly digitally saturated world?
That's a great question. I think it suggests a pretty fundamental shift in how brand value itself is perceived.
Yeah.
It might be moving beyond just exclusivity towards things like authenticity, adaptability, maybe even a bit of defiance, like we saw with the superfakes.
Right.
And for human capital,
Yeah.
it places an even higher premium, I believe, on those uniquely human skills. Critical thinking, creativity, complex problem solving, things AI can't easily replicate. So the businesses that will really thrive are probably those that can strategically use AI for efficiency, yes, but while also fostering a very human-centric, adaptable work culture. It's a balance.
And finally, our third deep question for you. From all the complexities we touched on, international trade, military aid, domestic policy shifts, it really seems like global and local landscapes are just in constant flux, doesn't it? How might this heightened level of political and social volatility impact longer-term investment horizons? And what critical lenses should a well-informed individual, like you listening, apply to navigate all this uncertainty?
Well, that heightened volatility certainly implies that long-term investment horizons have to increasingly bake in robust diversification strategies and proactive hedging against geopolitical risks. You have to understand that political rhetoric can and does translate into tangible economic shifts pretty quickly these days.
Right, it's not just noise.
Not at all. So for individuals, applying that critical lens, it means not just staying informed on the immediate policy changes, the headlines. It means really trying to understand the underlying societal and technological forces that are driving these changes.
Looking deeper.
Exactly. Rather than just reacting to the news cycle.
Yeah.
The journal itself mentioned the old laws of politics are being rewritten. I think that really demands a far more dynamic, maybe more interdisciplinary approach to understanding the world around us.
A lot to think about there, as always. We certainly hope this deep dive has given you some truly valuable insights to consider for your week ahead. Until next time, stay well informed.